Well, I sure expected my summer vacation in Bahamas to start different. Thanks a lot, Wall Street. But here we are. Rough Monday for gold and silver. Great day for oil. In today's video, we're gonna look at what happened in the precious metals sector. What is behind the massive drops in gold and silver? What do we need to pay attention to? And then we're going to look at the technicals of oil as well, right ahead of the very important CPI data today. Let's get into it. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. Welcome to Hot Trades of the Day. My name is Daniel Wilhelmi. Before we jump into the explanations behind the unexpected sell-off in gold and in silver, quick housekeeping. First things first, new VIP newsletter video coming on Saturday. One last time, we're going to talk about the rules symposium. In this case, it'll be a strategy video because I talked to a lot of you, as you know. We talked about investing and portfolio management, and I would like to give some ideas and suggestions how that could be improved. And I think that's valuable for all investors because we can all learn. And again, it's a self-help theory, right? If we just get one great idea out of a self-help book that we then implement in our life, it was worth the time and it was worth the money. And in the case of a VIP newsletter, you don't spend any money because it's free. And as far as the time goes, well, as you guys know, I like to keep the videos around 20 minutes, not to steal too much of your time. If you're not a member and haven't signed up for the VIP newsletter, link is in the comments. Again, it's free. We're not going to spam you guys. Just one video a month on average. If something crazy happens, maybe we would do an emergency video, but usually once a month. And again, I like to think it's really quality content. Second housekeeping thing, and then we're off to the gold price, is a number of you came up to me last week at the Rules Symposium and talked about SpaceX. I had said in the previous video, if you're long SpaceX, you want to have your stop right under 150 on the close, or if you want to short the stock, then the break below 150 would be the trigger. I want to say, Hagen, you were one of the people that wanted to take the short trade if we break 150 after the idea I had. And let me pull up the chart here real quick. I tell you one thing, internet in the Bahamas, I learned a lesson. Palm trees do not increase the speed of internet transmission. So here's SpaceX. As you can see, the short trade is working really nicely. I hope some of you are in it. I'm personally not, but this is looking really good. But I would like to point out one thing, and we're not going to spend too much time on this trade. First off, if you're not in it, don't get in now on the short side. This thing has gone already, and it's only a swing trade. There'll be more swing trades coming. Totally fair if you're gonna take a victory lap, but don't forget to either also take some profits or put your stop right about 150. Actually, you know what? I would put it right above this green candle right here on the close. So that would be 152.45.50 on the close. Just remember, SpaceX, while a great story, will need a ton of money. They're going to come back to the markets. They're going to come back to the banks. And the banks will want this business bad. So they're going to try to do their best to hold up the stock either with very positive analyst reports or maybe some strategic buying, to show Musk, hey, we were on your side when the shorts were pushing down the stock. So don't get too greedy. You're doing great on the trade. Don't forget to set a stop loss or take some partial profits, and then take a set a stop loss and let it run its course. I personally, when you're on a short trade like this and you know Wall Street is on the other side and they're gonna come out and they're gonna try to defend the stock at some point, probably as soon as there's any type of bottom. If you are up and you made 10-15%, personally, I'll take that gain. That was easy money. I mean, I'm not your financial advisor. You need to do whatever you want to do, but that's what I would do personally. But then on the other hand, setting the stop loss at the 152, 45, 50 US dollar range, that's also a valid strategy. So enough of SpaceX. Let's get into gold. What is going on with gold? Because gold sure ain't going to the moon after what happened on Monday. Well, not going to the moon right now. So, what's going on? Well, out of the blue, Fed Governor Christopher Waller came out with really hawkish comments, which basically led to a complete reversal of the market's expectations for the Fed meeting on July 29th. So in about 2 weeks, we're going to have the Fed meeting. And all of a sudden, after these hawkish comments, because you need to remember, Waller was appointed by Trump. So this is a guy that actually, in theory, should be in Trump's camp of lower rates, lower rates, lower rates. Instead, he came out with really hawkish comments. So the market completely flipped. And now we have a 50-50 probability of a rate hike in July. A lot will depend on today's CPI. That's why it's so important. As if that wasn't tough enough, Waller listed 3 reasons for the inflation. And this is important for us to know. Tariffs, energy prices, and really strong consumer demand and consumption growth. So energy prices, well, sure didn't help that the oil price jumped yesterday in a big way. What had happened? Well, obviously Iran, the Strait of Hormuz. But most importantly, in this case, the technicals, the break of the 200-day moving average, and the shorties got squeezed. I talked about it, I think, pretty good ahead of time in Monday's video and yesterday's video, and obviously in last week's video when we got in really early on this oil trade. If you missed this video, hit the subscribe button. That's your chance to get ahead of the market. So would I jump in on the oil trade right now? I would not. I wouldn't jump in on the oil trade anyway. I would play it through the energy stocks. We talked about it before. Those are running. Great trade if you're long in oil. Now, I don't think oil is going to go to the moon. I still believe, I don't think oil is going to go to the moon, period. All right. I don't believe at all that these people that say we're going to see $200 a barrel oil. I especially don't believe it because we have midterms coming up and Trump will want lower oil prices or will try his best to push oil down at least till the midterms. But you could clearly see that oil was changing trend and it was a nice swing trade, and we were able to pick up some energy stocks if we wanted to at really attractive price points. And obviously a rising oil price, not great for gold, because that brings back the old trade of, well, all of a sudden if oil goes up and therefore inflation goes up, that is bad for gold. We had this trade in the spring and in the early summer, then the correlation broke and now it's back on. But when we look at the oil price, we also clearly need to point out one important factor, and that is you don't get a sell-off like we did yesterday when there is not some big players that were caught on the wrong side with leverage. Yeah, there it is again. The good old leverage game, and it just burned Bunsen Brenner style some portfolios down. Clearly margin calls happened here. Probably when we drop below 470, 475, this line right here, they were triggered. Clearly these people are trying to front run the market in what I told you about, with the anticipation that the inflation rate would come in softer, and therefore then the possibility of 2 rate hikes in the next 12 months would turn out to be too pessimistic, and that would then push up the gold price. We talked about it on this channel, but I also told you guys, hey, nothing is happening until we break the downtrend or until we break 4,215. That hasn't happened. Again, some people got taken to the woodshed here. So where do we stand now? Well, this was a nasty candle, and there is no sugarcoating. It destroyed a lot of positive developments in the short term in gold. Most notably, okay, so 4,000 held, that's nice. We didn't even come close to making new intraday lows, okay. So again, we dropped below 4,000 and out came the Swiffer vacuum. We talked about it in the last gold video that I did. If you look here at these long tails, someone is gobbling up anything that's falling below 4,000. So that's positive. What's not positive is, as you can see, we closed on the lower level since June 2025. So that's bad. That's a new 3-week low on the close. There's no sugarcoating this, right? Also, we clearly confirmed the downtrend again. So we're kind of back to square one. We're kind of back to where we were at the end of June and the beginning of July. Now, if we are looking at this from a bullish point of view, just as far as the technicals are concerned, if 4,000 holds, that clearly strengthens this is the bottom case, because look at the RSI, look where we are right now, and you can see that we are right at the uptrend that I drew in. And if we turn upwards at this uptrend, this is now basically the second confirmation, right? So we had the low here, then we had a higher low, and that establishes the trend, even though we got a lower low in the gold price intraday and on the close, and then it got confirmed here, and it would get confirmed here, and that would really strengthen our argument. Now, we're not there yet, but that is the bull case. The bear case, we know what it is. We fall below 4K, we're going to get the undercut, we're going to get the liquidity grab. You know the drill. So we have to wait for the CPI number. It's going to be really wild. I hope you're not in the market with leverage. And quick side note to end the video. Some people ask me, hey, you said you're going to buy on Friday. Did you buy on Friday? Yes, I did. Yes, I did. I said it here on the channel, and that's what I did. I was in the VIP section, the Rules Symposium, typing away like a crazy person on the laptop. I know Anthony was in. They was talking to two gentlemen near the coffee place. I saw him and I saw Sean, so they probably saw me thinking that went completely crazy there for 10 minutes. Bought two gold stocks. Not gonna disclose the names here. No silver yet. I really want to get in on silver. I'm very bullish on silver long term because I do love the fundamentals, especially on the industrial use case side. But yeah, that's what I did. Am I down on these positions? Yes, not dramatically, but of course I'm down. So is this great? No, it's not great, but that's part of the game. We look at the market and we see and adjust the probabilities, what can happen. It looked really good at the end of last week. Nobody could see this Waller speech coming, and then this sell-off clearly also triggered by margin calls, and that's what happens. That's why you don't enter the market binary 100% or zero. You get in with first positions to position yourself in case we break out to the upside. Okay, we're going lower. Maybe this is it. Maybe we'll hold at 4,000. Maybe we get the undercut. If we get the undercut, I have the liquidity to massively add to my positions. I'll be super happy with doing that. And yes, I won't be able to get the max profits, but it's not about the max profits, because if you want max profits, that will lead to mistakes anyway. Right? It's all about, we just want to get our piece of the pie. We're going to talk more about it again in the strategy session in the VIP newsletter. That is it for today. We're going to talk tomorrow after CPI is out, and we will see where gold, where silver, and where oil will be then. I have a great day. We see us tomorrow. Bye-bye.